The stock market is a fascinating and often misunderstood world. For many, it seems like an exclusive club for the wealthy and well-informed. However, it's a crucial part of the global economy, accessible to anyone willing to learn. Understanding its basics can empower you to make informed financial decisions. Engaging with the stock market doesn't require a finance degree. With the right knowledge, anyone can navigate this system. This essay aims to provide a solid foundation of the basics. By demystifying the stock market, we hope to encourage more participation. Investing can be exciting and nerve-wracking. High returns come with risks. Understanding the market helps in making strategic choices. This essay will guide you through essential concepts. Remember, knowledge is power. The more you understand, the better your investment decisions. Let's explore the fundamentals of stock market investing. The stock market is a marketplace where buyers and sellers trade shares of publicly listed companies. Each share represents a small ownership stake in a company. It operates like a farmer's market, but instead of goods, people trade pieces of companies. Exchanges like the NYSE and NASDAQ provide platforms for trading. Prices fluctuate based on supply and demand, influenced by various factors. The stock market allows companies to raise capital and investors to grow wealth. It is a dynamic environment, driven by millions of participants worldwide. The primary purpose of the stock market is to facilitate the raising of capital for companies. By issuing shares, companies can access funds needed for expansion, research and development, or to pay off debts. This process enables businesses to grow and innovate, contributing to economic development and job creation. For investors, the stock market offers a platform to invest their money with the potential for returns. By purchasing shares, investors can benefit from the company's growth and profitability. This opportunity to earn dividends and capital gains is a significant draw for many individuals looking to build wealth over time. Another important function of the stock market is to provide liquidity. Liquidity refers to the ease with which an asset can be bought or sold without affecting its price. The stock market ensures that shares can be quickly traded, allowing investors to convert their investments into cash when needed. Furthermore, the stock market plays a vital role in price discovery. The constant buying and selling of shares help determine the fair market value of a company's stock. This process reflects the collective assessment of all market participants, taking into account available information about the company and broader economic conditions. The New York Stock Exchange, NYSE, is one of the most prominent stock exchanges in the world. Located on Wall Street in New York City, it has been a symbol of American capitalism for over 2 centuries. The NYSE is known for its iconic trading floor, where traders engage in buying and selling activities throughout the day. The NYSE operates as an auction market, where buyers and sellers gather to trade shares through a process of open outcry. This means that bids and offers are made verbally, creating an exciting and fast-paced environment. While much of the trading is now electronic, the physical presence of traders on the floor remains a hallmark of the NYSE. Companies listed on the NYSE are typically large, established firms with a strong track record of performance. The exchange has stringent listing requirements, ensuring that only financially healthy companies can be traded. This provides investors with a level of confidence in the quality of the stocks available. The NYSE is home to many of the world's largest and most influential companies, including blue-chip stocks like Apple, IBM, and Coca-Cola. Its global reach and reputation for stability make it a cornerstone of the international financial system, attracting investors from around the globe. Section 5. Major Stock Exchanges, NASDAQ. The NASDAQ is another major stock exchange, known for its technological innovation and electronic trading system. Unlike the NYSE, NASDAQ does not have a physical trading floor. Instead, it operates entirely through a network of computers, making it the first electronic stock market in the world. NASDAQ is renowned for its association with technology companies. It is home to many of the world's leading tech giants, such as Microsoft, Google, and Facebook. The exchange is particularly attractive to fast-growing companies in the tech sector due to its flexible listing requirements and focus on innovation. The electronic nature of NASDAQ allows for faster and more efficient trading. Orders are matched electronically, enabling real-time price updates and seamless transactions. This system has revolutionized the way stocks are traded, making NASDAQ a leader in the global financial markets. NASDAQ's emphasis on technology and innovation has positioned it as a key player in the stock market. Its ability to adapt and evolve with the changing landscape of finance has ensured its continued relevance and success in the modern era. Section 6. How the stock market works. IPOs. An initial public offering, or IPO, is the process by which a private company offers its shares to the public for the first time. This marks the transition from a privately held entity to a publicly traded company. IPOs are a significant event in the life of a company, providing access to capital and increasing its visibility in the market. The IPO process involves several steps, including selecting underwriters, filing regulatory documents, and setting an initial price for the shares. Underwriters, typically investment banks, play a crucial role in managing the IPO, helping to determine the offer price and marketing the shares to potential investors. For investors, participating in an IPO can be an exciting opportunity to invest in a company at the beginning of its public journey. However, IPOs can also be risky, as the company's future performance is uncertain. It is essential for investors to conduct thorough research and consider the potential risks before investing in an IPO. IPOs are a vital mechanism for companies to raise funds and achieve growth objectives. They also contribute to the dynamism of the stock market, introducing new and potentially lucrative investment opportunities for the public. Section 7. How the stock market works. Trading mechanisms. Trading in the stock market involves buying and selling shares through a broker. Brokers act as intermediaries between investors and the stock exchanges, facilitating transactions and providing access to the market. Today, most trading is conducted electronically, allowing for fast and efficient execution of trades. There are two main types of orders that investors can place: market orders and limit orders. A market order is executed immediately at the current market price, while a limit order specifies a price at which the investor is willing to buy or sell a stock. These orders help investors manage their trades and achieve their investment goals. The stock market operates on a bid and ask system. The bid price is the highest price a buyer is willing to pay for a stock, while the ask price is the lowest price a seller will accept. The difference between these prices is known as the spread. Successful trading involves navigating these prices to make profitable transactions. Trading mechanisms are essential for the smooth functioning of the stock market. They ensure that transactions are executed efficiently and transparently, providing investors with the confidence to participate in the market. Section 8. Risks and rewards of stock market investing. Investing in the stock market offers the potential for significant rewards, but it also comes with risks. The value of stocks can fluctuate based on various factors, including company performance, economic conditions, and geopolitical events. These fluctuations can lead to gains or losses for investors. One of the primary risks of stock market investing is market volatility. Prices can change rapidly, sometimes without apparent reason, leading to uncertain outcomes. Investors must be prepared for these fluctuations and have a long-term perspective to withstand short-term market swings. Despite the risks, the stock market has historically provided higher returns compared to other investment options, such as bonds or savings accounts. Over the long term, stocks have the potential to outpace inflation and deliver substantial growth, making them an attractive option for wealth accumulation. To mitigate risks, investors can diversify their portfolios by investing in a variety of stocks across different sectors. This strategy helps spread risk and reduce the impact of any single investment's poor performance. Understanding the risks and rewards is crucial for anyone considering stock market investing. Section 9. Conclusion and further learning. The stock market is a dynamic and integral part of the global economy. Understanding its basics can empower individuals to make informed investment decisions and potentially grow their wealth. By exploring the functions of the stock market, major exchanges, and trading mechanisms, we have provided a foundation for beginners to start their investment journey. Investing in the stock market is not without risks, but with the right knowledge and strategy, it can be a rewarding endeavor. As you continue to learn and explore, consider seeking additional resources, such as books, online courses, and financial advisors, to deepen your understanding of stock market investing. We encourage you to take the next step in your financial education. The stock market offers endless opportunities for growth and discovery. By staying informed and proactive, you can navigate the complexities of the market and work towards achieving your financial goals. Remember, the journey of investing is a marathon, not a sprint. With patience and perseverance, you can build a solid foundation for your financial future. Happy investing!